Dr. Boateng of the University of Mines and Technology is standing in for the Honorable John Kuma, Deputy Minister of Finance and Economic Planning, to moderate this event or this session. They will be talking about tax incentives and explorations, minerals funds. The minerals funds is the innovative aspect of our mining activity in these few years. Then they will also talk about local participation and company shares, community mining and all that. Dr. Boateng, please take your seat, but be careful with the first step. Joining him is the CEO of Adamus Resources Limited and Northern Asante Mining, Angela List. I see a lot of crowding and networking at the gate. Shall we get seated? I'm hearing your voices here. Thank you. Nice networking, but please, it will be over soon, and at lunchtime, we can talk some more. The Executive Vice President of Asante Gold Corporation, this man is not new to this event. I guess he's been here all 3 times. The CEO of Ghana Chamber of Mines. Last year, he made a very spirited presentation. Please, watch your step. The microphones are by you. You don't have one, Dr. Boateng. You borrow one. Okay. I'm sure whatever tricks that I do, but I will do the introduction until he enters. He took advantage of the short break. Mr. Edward Nanaya Korateng, CEO of Minerals Income and Investment Fund. Just on time. Mr. Korateng, the last seat is for you. Okay, Dr. Boateng, so
thank you.
Action.
Thank you very much, Senior Kobina, RMC. Nana Tetrete, and with all protocol duly observed, I am actually standing in of the previous protocols. Thank you. I am pretty sure that my respected gentleman and Lady Angela here would want to make a quick presentation. So if there is any presentation you want to do, I will allow you time to do that. I know Mr. Sulemanu Koney is not doing a presentation. I don't know about Uncle Fred. Okay. Nanaya will do a presentation that I know for sure. Okay. So we will allow Mr. Fred Attakumah to do his presentation briefly. The Executive Vice President, Asante Gold Corporation. Uncle Fred, please.
Hello? All right. Nana Chairman, honorable ministers, and I think I'll ride on the back of the protocols already established. Thank you very much. Today is my first day at work, so so I hope you'll be gracious to me. I think we'll just wait for the slides to come up. But we're very excited at Asante Gold for what we're trying to do. I believe that when we talk about multinationals operating in African countries, one of the issues has been around local content and local participation. We've come a long way when it comes to local content, but I think local participation from an ownership perspective has always been a bit of a challenge. And we do have a story for you in Asante Gold, so I think we'll get into the details as the slides come up. But I think whilst waiting for it, we'll just jump into it. Asante traditionally was an exploration and project development company, but last year a lot changed. The key highlight being the acquisition of the Bibiani mine. You'll recall we acquired Bibiani for $19 million, which was in 3 tranches. We paid the first tranche in August 2021. The second tranche we paid in February, and in August this year we'll be completing that obligation to Resolute. And I must place on record our gratitude to the government for the support that was given us during that process with the relevant approvals, etc., to enable us get that far. So that we're going quite far at this stage with the plant refurbishment work. Some of the milestones that we had actually assured our shareholders of, we've delivered. In fact, practically all of them. The whole issue around a preliminary mine plan on the basis of which we could mobilize a mining contractor, PW, locally registered company. First, all got to the ROM pad at the end of February as we anticipated. And we're tracking really nicely towards putting ounces on the table in July this year. We also have the Kubi deposit, which we're doing a fair bit of exploratory activity on to further define that resource. And I believe that will be brought into account, as well as we go ahead. I don't know if you have the slides coming up any moment now. Well, I'm being told to continue. So I think Bibiani project, really, like I said, is a very exciting one. And I did indicate that the model that Asante is putting on the table is quite different from what we've traditionally seen, a multinational company do in our industry. As we speak today, Asante is worth just under 600 million Canadian dollars. Our share price as at yesterday was about 1.89 Canadian dollars per share. But if you went back a year ago, the company had a share price of just about 8 cents per share, and the market cap was about 8 million Canadian dollars. And then under the leadership of our executive chairman, who's really keen to drive the local participation bit, we went through a fundraising process. So baseline, 8 cents per share, $8 billion market cap. We did an exclusive Ghana-based Ghanaian, and I'm emphasizing this, Ghanaian fundraising, capital raise. So we were able to raise about $7 million from Ghana. It wasn't from outside, any other place. Came from ordinary Ghanaians like you and I who believed in the vision of Asante. And I think at the time, we hadn't even gone into too much work with the Bibiani project. It was purely based on the Kubi deposit. But I think the Ghanaians who decided to put their money in believed in the vision, believed that we've come of age. Over 100 years of commercial mining in Ghana. it's about time that we started taking a much bigger stake, in our mine. So we bought shares at 15 Canadian cents. The baseline was 8 cents. So we did pay a premium of close to 100%, which took the market cap to about $15 million. And then we got into conversations with, Resolute, following the original arrangements that did not go through with the Chinese firm, etc. We got selected out of about 4 or 5 companies. And when we, the market respected what we were trying to do, recognized it. And cut a long story, we've gone through a few fundraisings, I think around about August last year as well. We had 2 cornerstone investors come into the party, Emerald and Fujairah Holdings, who gave us in the region of about $60 million to enable us, as it were, deal with the payment that was required by Resolute, and also start dealing with the plant refurbishment work, the preliminary mine planning and all of that. But cut a long story short, from 8 cents, today we're talking about, $1.89. From the Ghanaians who invested 15 cents, today the value of their share is 1.89 Canadian dollars. That's about 1,200% increase. And this is where the real value sits. Okay, this is where the real value. Now, this has traditionally not been the case. With all respect to my good friend, Joshua is not here, and all that, but I don't think any multinational operating in Ghana can boast of this. As we speak, this $593 million market cap, as we speak, 49.6% of that is held by Ghanaians. Okay, it's held by Ghanaians. And the rest, we are not saying we want it all, it's partnerships. We have cornerstone investors, etc. And I must commend our CEO of the Minerals Income Investment Fund. I'm sure many of you heard that during our latest raise, they put in about $20 million to acquire in the region of about 4.5% of our company. Now, this is, there again, they're blazing a trail that hasn't happened in the history of mining in this country. Traditionally, it's been dependence on royalties and all of that. But I remember about a week ago, we were having a chat in my previous life, and we coined the phrase beyond royalties. I think we want to get our mining industry to the point where it is no longer seen as just an enclave that sits on its own, but one with real strong dynamic and serious linkages with the broader economy, so that we can truly say that mining is beneficial to us, because other economies and other countries have done it. So why can't we do it here in Ghana? So we're very excited in Asante. Like I said, it's a new model that we are presenting. We are listed on the Canadian Securities Exchange as well as the Frankfurt Stock Exchange. And we are far advanced to list on the Ghana Stock Exchange as well, so that a lot more Ghanaians can also participate in this real opportunity that is available to us. So I think, well, I don't think the presentation is going to come as well, but I'll just wrap it up. But I think the key lesson we are tabling is it's a new model. It's a new model for multinational mining. Ghanaians can also start owning companies, and today you can walk out of here knowing that ordinary Ghanaians like you and I own half of an almost 600 million Canadian multinational mining company. Thank you very much.
Thank you, thank you. So, for those of you who did not understand when Fred said, today is my first day at work, he's actually starting work today. Fred was executive director at Asanko, and he's just switched over to Asante Gold. So today is his first day. That's why he said he's starting work today from, this mining week. So you can give it up to Fred. Thank you. Yeah, I will be going to Mr. Edward Nanayao to hear the myth story. But then before he starts, I know in the 80s and early 90s, mining was predominantly owned by government of Ghana, and it was managed by the State Gold Mining Corporation. When immediately after the reforms, in the 90s, we began to diversify, and that brought in outside investors to take over the mining industry. And we've seen it growing from leaps and bounds. Today, government of Ghana want to go back to have ownership beyond the 10% free carried interest. We want to hear the myth story. What has changed? Why this paradigm shift? We know it's positive, but we really want to hear from you. Let's give it up to Nanayao Korateng, the CEO of Myth, to share the Myth story.
I am not too sure I'll have to go through the all protocols observed situation because I have two members of my board here, and I can't go through the all protocols. So I'll first have to acknowledge and say a big thank you to the chairman and Nana and my very good friend and schoolmate, Honorable Kobe, who's our host, my former board chair and member of the board, Honorable Miriku Duka, my own honorable, who is also a very good friend of mine, and I think Professor Foyisapon is here? Yes, she's here, and Professor is also on my board. So I have to do well to acknowledge the board members and colleagues. And then all protocols observed. I think my good friend, Fred, has virtually gone through the myth story for me in one way or the other, and the objective of the government to a large extent underpins what myth is all about. But I have 10 minutes. I really love to engage, and hopefully when we have the questions and answers, we'll have time to properly engage. I can barely see because of the light, so forgive me, I might be concentrating on the very first row. I can't see beyond the third row, unfortunately, irrespective of my third eye. So, I think someone is controlling it, I believe, so I don't have to touch this. So I'll go with the myth story. MIF means Minerals Income Investment Fund. And as the moderator rightly put, government in the past, our income was all going into the consolidated fund, royalties, etc. And then the government, led by the president, with a vision to create more sustainable value for the mining sector, said, nope, we need to create an instrument or an entity that will give us more value. Initially, MIF was all about gold, but that was changed to cover all minerals. That's why we have Beyond Gold. So the Minerals Income Investment Fund was created under Act 978, as amended, Act 978 2019 as amended. And what we are meant to do is manage first the equity interest of the government in mining entities. As it was rightly said, government of Ghana has 10% carried interest in all gold mining entities. And then to also manage the aggregated royalties that comes from all mining entities. When we say manage, it means it's collected by GRA, it comes to us, 20% of it goes to the Minerals Development Fund, and we are mandated to invest the rest. So really, by saying that I've more or less outlined the vision and mission, I'll look up, just read through because again, I can't see. So the key objects of the fund, really, as I've said, is to maximize the value of the income due the Republic from the mineral wealth of the country for the benefit of its citizens, which means we have a fiduciary relationship with all of you. So it's not really about MIF. I mean, buying 5%, 4.65% of Asante Gold Corporation, we are doing it for the citizens of Ghana. perhaps, as the moderator rightly put, a sort of a clawback strategy where we subtly, we don't want to mention that because that could be a bad word for investors, but in a way trying to get more value for Ghanaians by clawing back some of what we have lost or had lost in the past through the 1990s, 1980s reforms. So we also to monetize the minerals income. I've said that in a beneficial, responsible, transparent, accountable, and sustainable manner. Develop and implement measures to reduce the budgetary exposure of the Republic to minerals income fluctuations. Our vision is to build a world-class minerals investment fund. Our mission is to transform the Ghanaian mining sector through investment of our minerals income in a sustainable, transparent, and responsible manner for the benefit of stakeholders. In building a world-class minerals investment fund, we are looking at best practices. So we are looking at the Norwegian Sovereign Fund, we are looking at the Abu Dhabi Fund, we are looking at all these funds, but we are concentrating on minerals. We've made a promise to the citizens of Ghana that within 5 years, we'll have $500 million assets under management. And I think we're on course. At the moment, we have a war chest. We're still new, but we have a war chest just in excess of $200 million. We're working to expand the royalties net. Hopefully, we should be moving towards $200 million every year. Our investment approach, this is not exhaustive. We have a very detailed investment policy and guidelines that sorts of underpins our approach towards the market and in choosing the asset classes. So this is just a bit of a summary. The main source of our income is the minerals royalties. I've mentioned that. And then the dividend that is paid us from the likes of Goldfields, AngloGold, etc., Newmont, because of our carried interest. That dividend comes to MIF as well, and it's part of the strategy or it's part of the aggregated funds that we are investing. Then we have other royalties. Again, I have to emphasize that our royalties are from all the mineral sources, apart from bauxite, because of government's deliberate strategy on bauxite. So I think Prof mentioned 16 minerals. I think, in my view, we should have about 18. We've just discovered barite, I believe. And uranium was not mentioned as well. But apart from bauxite, all the royalties from all these mining classes comes to MIF. Our investment avenues. Well, again, this is not exhaustive. This just for the purposes of time. We invest in financial instruments, of course, but we are looking at very good long-term sustainable asset classes, especially in the mining sector or in the mining value delivery system. So we have Asante, which we are very proud of. That was a historic buy, and I think my team deserves a round of applause for that. That is giving us 4.65% of a mine that I sincerely believe is really a gold fields. I embarked on a tour of Bibiani just last week on an Ashanti regional tour, and I think you virtually understated your reserves. I think it's more than what was stated. And if you look at the expansion plan and the development plan of Asante, Ghana is going to benefit. So the whole idea that we have 49%, is it 49%? 49% Ghanaians having equity stake in a multinational company is exactly what the vision and mission of MIF is about. And it's not just gold, it's other minerals. So we also have special purpose vehicles. Example, I'm sure most of you have heard about our company, our SPV, that's incorporated in the United Kingdom. That is Ejapa Royalties Company. Our aim was to list Ejapa on the London Stock Exchange and the Ghana Stock Exchange. It was passed, but we had some issues with Parliament, and with certain CSOs. So the president, in his wisdom, asked that we bring it back and respond to all the issues that had been raised by Parliament and the CSOs. So hopefully we will bring back, we'll work on listing Ejapa, which is the only state-owned royalties company in Africa. I mean, this again aligns with the clawback strategy that we have. Ejapa's intention is to invest in other royalty companies in the world, to look at possibility of even investing or buying equity or stakes in global mining companies like the likes of Barrick, etc. But Ejapa, unlike MIF, has to concentrate on gold. MIF, we are looking at alternative investments. We are looking at developing strategies that adds value to the mining sector. We are looking at salt at the moment. We are looking at silver. We are looking at manganese. We are looking at how we participate in lithium. We are looking at the small-scale mining sector. We've developed a program called the Small-Scale Mining Incubation Program, for which we've actually, I'm signing the MOU tomorrow. We've actually raised $500 million to support the small-scale sector over the next 14 years. That has never happened in any African country. I think my team again deserves a round of applause. I don't know who's yes. So the strategic projects and initiatives. Again, I mentioned the small-scale mining incubation. So what we are doing with the small-scale mining incubation is this. We are looking at 4 main elements. This program was based on thorough research from October last year. The small-scale sector gives us about 40% of our total gold output, right? And that's about $2.1 billion. But that 30 to 40% is actually about 60% of the actual output of the small-scale mining sector. Ghana stands the risk of our gold not being recognized because of all these unsustainable measures or means of mining, the environmentally unfriendly ways of mining, etc. But a formalized small-scale sector means more royalties to me. Formalized small-scale sector means more gold, more growth of small-scale mining companies to mid-tier companies. So we designed this against that thought. And what we are doing is providing a guaranteed market or guaranteed offtake to the small-scale miners. We are working with the Minerals Commission, who will ensure or provide us or support us in ensuring that those small-scale miners that we put on board or place on board meet all the requirements, pay their royalties, do not mine in an environmentally unfriendly manner. So we're doing this with Minerals Commission. And then we are supporting them with machinery and digitized weighing instruments. Then we are supporting them with capacity. We're doing the capacity development and implementing what we call a traceability mechanism. What we mean by the traceability is that just to mitigate that risk of our gold not being recognized, we are able to put in this mechanism that recognizes or ascertains the source of the gold. So from pit throughout the process to export. We know that if this gold is from Asankregwa, we have a system that tells you that this gold is from Asankregwa. So that enables Ghana's gold to be bought at a premium. And then we've arranged an off-taker. We've worked on some off-taker mechanisms. That means that all those small-scale miners that we are bringing on board will have their gold traded every single day. We've already, like I mentioned, we're signing the MOU today is $500 million. We're also supporting them on the environmental aspect with the support of Solidaridad, who provide us with more or less the environmental audit when it comes to ensuring that these small-scale miners mine in an environmentally friendly manner and are aligned to what the Minerals Commission have put in place, or the regulations. That has to be ensured. And then, again, we're having a panoramic evaluation and monitoring system that ensures that all the mechanisms that we've put in place actually works. Hopefully by September, this program will be put in motion with the initial $70 million. So this, I think apart from major part, this is what excites me most, because I believe that the real value, the real sustainable value of our sector when it comes to gold really rests on small-scale mining. My apologies to the major mining companies here. I think I've talked about the small-scale mining sector. I should have mentioned some data, I think because I can't see, but if we go back, 4.5 million livelihoods are supported through small-scale mining. We have about 12.5% of the working population employed by the small-scale mining sector. The small-scale mining sector actually employs more people than the cocoa sector. So this is where, to us, we have to give value to derive value. And that is why the incubation program is such an important flagship program for MIF. But I don't want to say that we are concentrating on gold alone. We are a minerals fund. One of the sectors that we are really looking at is the salt sector. You know, Ghana and Senegal are the main industrial salt producing countries across the West Coast. Industrial salt is needed for the oil and gas. I think we all are aware of that. But Nigeria just goes past us, goes past Senegal, all the way to Brazil to buy the salt that they need for the oil and gas sector. For us, we call it the white gold. And we think that if you really look at salt and you compare that to gold, where you have tenors when it comes to the life of these mines, salt actually gives us much better potential in the long term than gold. So we are looking at salt. We're also looking at the quarry sector. Maybe when it comes to the partnerships, I'll mention it. We are looking at the quarry sector. Ghana's, there's a direct correlation between quarrying and economic development. The more you develop economically, the more you have your infrastructure development, automatically, the more you have the quarrying sector going up. But we have a lot of issues with the quarry sector. And there's one area that MIF is trying to look at. We have issues such as underpricing. We have issues in relation to foreigners manipulating the prices, which is affecting the local quarry sector. And then most importantly, we have settlement issues. We have encroachment on these quarry sites. So we are seeing, we don't take care, and I think the Deputy Minister mentioned it a couple of weeks ago. If we don't take care, in 20 years' time from our research, Ghana will start importing stones from Togo. And that's as stark as, and it could be earlier than 20 years. If you sort of use the rate of economic development and infrastructure development, if you don't take care, it could be 10 years' time. So there's a sector that we also want to look at. We are working on what I call a de-risking mechanism with certain banks to support the quarry sector. By doing this, what we want to do is that a good quarry, we have a checklist, and the good quarry companies, we will underwrite to a certain portion of percentage, whatever they're borrowing from the banks. Accessibility to credit is one of the main issues that is affecting the quarry sector. So what MIF is looking at is, of course, we need to make money. It's your money. So what MIF is looking at is, for example, this quarry company that ticks all the boxes wants to borrow $30 million. We either participate with the bank by giving the bank 10 million and the bank providing 20 million, we share the spoils and we provide that to the quarry company. Or we underwrite by guaranteeing or providing, the guarantee is a collateral more or less, or providing that collateral or that guarantee of, let's say, 30%, 40% to the bank. So that bank, that's why we call it de-risking. So that bank sort of has its risk mitigated. I'm happy to say we started having conversations with that Greek Development Bank, ADB, on this, and we're moving quite far with that conversation. So again, with the quarry sector, just like the small-scale sector, we have some value additions that will make their businesses sustainable. On the incubation, small-scale mining incubation, I have to put it back. We are working with the CBG, again in line with the local content policy being pushed by the government, that we need to ensure that the value delivery system of the mining sector is as much as possible local content fed. So we are working with CBG on that. With local partnerships, again, one of the things that MEF is trying to do is to expand the royalties net. Borrowing the words of my finance minister or sector minister, we need to expand the tax net. And one of the ways that we want to expand the tax net is through the, if we could go back, through the interagency, yes, the interagency framework. So what we've done is to go into an interagency framework and a task force with GRA, Ghana Standards Authority, Minerals Development Fund, and thank you. Yeah. Okay. Minerals Development Fund, and sorry, I have 3 minutes. I could have gone on. Yeah. So we with GSA, Minerals Commission, Ghana Revenue Authority, and now Minerals Development Fund. In expanding the tax net or the royalties net, we've realized that the non-gold entities are either underpaying or not paying at all. Let me give you a scenario. And I talked about the quarries. The quarry sector, in terms of royalties, should be paying us 100 million cedis a year in royalties. In worst case scenarios, they should be paying 56 million cedis. Guess what we got in 2020? 3.5 million cedis. That's what we got in 2020. I mean, I've been going on these tours, and the quarries associations all deny this, and but to be able to bridge this and to be able to arrest this situation, we've established that task force and the framework. The good thing is, since December, we've seen an increase by 135%. So that is working. For the first time in the history of Ghana, sand winners are paying royalties. This is a situation we never had. So we want to not too much concentrate on gold, but to look at other minerals. So at MEF, we now have the small-scale mining unit, the large-scale mining unit, and the quarries and other minerals unit. The quarries and other minerals unit have no business with gold, and that concentration is on all the other minerals that we've mentioned. So we'll be developing strategies and investment proposals or propositions that are connected with these other minerals alone, and that we'll be putting forth maybe in a couple of weeks' time. Yes. Well, I skipped the local partnerships, but I think for invitees here, that could be important. For MEF, we're also looking at establishing relationships with banks, with other funds. Again, based on what I just said, we want to see how we can collaborate on investing, be it lithium, be it an engineering company, be it the de-risking mechanisms that I talked about regarding the banks, etc. So we are looking for these partnerships. We plan to have AUM of $500 million by 2026. But I'm telling you, we build our royalties war chest we can build it by $200 million every single year. So we actually do have a good war chest for a fund that is so young. So that collaboration and that partnership is what we are looking for, and that's actually one of the objects of us participating in this conference. So my team and I will talk to a number of you, especially those who are looking to invest in the value delivery chain, the mining sector. It need not be gold. It actually could be sand winning, or it could be granite, it could be limestone. We're here to support and add value to Ghana. So I think for 2022, we are committed to open and transparent communications regarding our objectives. Our main object is to add value to mining in Ghana, and to invest in good assets for Ghanaians, to carry the Ghanaian and African story, hold it high, to invest in classes or asset classes or mines such as Asante. We are doing cross-border, so it's not just Ghana. We're looking at Malawi, we are looking at South Africa, we are looking at the United States, and at MIF we believe ambition is not a dirty word. So we are extremely ambitious, and we'll get there. So, my host, thank you very much, and thank you for your time.
Thank you.